Of knowing the difference between correlated assets and reverse correlated assets are being able to always trade and be consistently profitable, because knowing that if this goes down, that's going to go up, and that's always happening. And that's why you want to keep an eye on the futures. Basically, always knowing like when the market was going down, but oil was going up, you had an opportunity to be trading oil. When the market started to go up and the US dollar went down, oil went down, you were able to trade stocks. So, knowing these types of things, it's pretty easy to learn, but it is a vital key for something basic to learn that it takes a second to realize this when you're starting to learn how to trade stocks. So, I'll show you just a little bit of how that works. Some of the stocks this year that were correlated, and as well as things that are uncorrelated. Because with correlated assets, like say the S&P goes up, then Bitcoin goes up, and you want to get the best ROI, then you want to find trades that are stocks that are related to Bitcoin, like a Mara, a Riot, a coin, and then trade those. And you can trade weekly options on those around key economic data. And that's what allows you to get massive returns. Even if you had just traded the actual spot stock without options, you could have still made some good returns. And I'll show you some. For first example is the S&P 500. As you see, the S&P 500 basically it's had a pretty active year. Obviously, it started a year ago. Everything was like pretty bullish, and then the market just completely tanked since then. But even when you tank, like say that that's the high from November 2021, that says December, so that's January, went down here all the way to March. Then it had that nice run in March. These are the type of runs as traders you can make some great money on. Then it had a crash. You could have bought puts. Ultimately, had that little run. Tiny runs like these trick a lot of people out. These like little bull traps, then into a nice another bear, and then ultimately like from June till August, it had that nice multi-month bear bull market, and then another like quick bear to another little bull, and then a bear. Like I don't know, very consolidated in this area. We're having like a tiny bull right now. These aren't massive bull markets or anything, but that's pretty much what's at stake right now in the market, like what's available. So you got to adjust to what's available. And now we have this key data coming up on Wednesday. So that's what will determine the direction of the S&P 500. But as you saw, the S&P 500 and Bitcoin are pretty much the same. You see, like it had completely crashed, and then in June, like to August, it had this nice run up, and then boom, crash, little run up in September, mostly sideways and like trying to break that 20,500 mark. It's been above it a little bit, but it hasn't had any nice closes and confirmations the next day for it. So ultimately, you see that's what you need for like a nice run. And then you can go in from there to like Amara, which is a Bitcoin miner stock. And you see that also like in that June run, it came end of June till August, gave you a nice 2 month upside, then down that same like upside for that. And like this is what you kind of trade options around. For trading individual stock, these are a little harder. Um, but that's sort of how the market works for correlated assets. And then for uncorrelated assets, what you do is you go to the US futures, then you go to the US dollar. You see that as it went up throughout the year since last year when the market started to go down, as far as the Dow Jones started to crash, the US dollar went up because everybody wanted to get into US dollars to capitalize on the crash later. So that's what made it go up to 111, as high as almost like 115. And that means that for every 100 US dollars, like it was worth 115 to people because they wanted to have those dollars to capitalize on the stocks that were going down and then hold for the long term or even short term plays. But ultimately, that's why the US dollar is so strong right now, because more people want to be in the dollar instead of stocks or other assets, because everything's overinflated. So they want things to pop, buy in, hold for another 5 to 10 years, sell, rinse, repeat. And that's how the wealthy stay wealthy. But you can use it to your advantage too if you learn how to do that. So there's two assets. When the US dollar is going up, you see that silver, as the US dollar goes down, silver goes up, US dollar went down, silver went up, US dollar goes up, silver goes down. And you can just play that with puts and calls. Like silver, you can go to like a stock like SLV, and then you can trade it. SLV is better than GLD. GLD is for gold, but SLV has like more liquidity and just more volatility, in my opinion. I'd be interested in the comments to see if other people have differing opinions or if you like other silver options trades. And you can see like there's tons of opportunities. Like it went sideways, a nice up, nice down, ups, downs, like very volatile, like tradable events here. Once you learn options, but as far as like stocks, if you were just learning, like once you see like the S&P 500 or the Nasdaq is going up, you see there's always like one stock in that time period, whether it's like 2 weeks, 4 weeks, see that it can go up like right here. It went from about $5 all the way up to $30, a 600% gain, 6x. And if you had options for like, you could have had a 20, 30, like much bigger returns based on if they were weekly or monthly options. Then you see also like it's great for puts. Like it comes as the market started to go back down and like data was bad here. Obviously, like this was so overextended that it just came right back down. So that's how you can see when to get into and when to get out of bullish stock trades and when to get into bearish stock trades. And ultimately, when things heat up, like USD is going up, oil is going up, so you can get into those sectors, things that are doing good around that, and get out of the other ones. That's pretty easy. It's pretty straightforward. Any questions you have, ask those in the comments. Of course, this is just my opinion. It's not financial advice. Any investing you're going to do, contact a certified financial advisor.